They called it a scam, a bubble, a threat to the global economy. Yet behind closed doors, the very institutions that once denounced cryptocurrency are now building its future. Here on Wall Street, the imposing bastions of traditional finance once stood in fierce opposition. These archival records flashing across the screen show us the intensity of that public condemnation. Jamie Dimon, CEO of J.P. Morgan Chase, dismissing Bitcoin as a fraud in 2017. Larry Fink of BlackRock, once labeling it the money laundering index in 2018. A unified voice of doubt aimed at the nascent digital frontier. But look closer at this digital document from 2020, a screen capture of a job posting on J.P. Morgan Chase's own career page. It's for a digital asset strategist, a seemingly mundane detail, yet a stark contradiction to the fierce public statements made just years before by its leadership. This split graphic visually hammers home the divergence. On one side, bold public headlines denouncing digital assets. On the other, subtle news snippets quietly detailing investments and new services. Public condemnation versus private accumulation. The question emerges, why the two-faced strategy? Inside these gleaming, silent halls of power, unseen decisions were being made. This isn't an accidental shift, driven by reaction. This is a calculated, deliberate pivot, a strategy orchestrated within the opaque walls of Wall Street, shrouded in deliberate secrecy. The glowing lines on this animated world map show us the expanding network, connecting major financial hubs from New York to London, Frankfurt to Hong Kong. A silent, coordinated expansion, revealing the immense scale of this hidden endeavor, far beyond casual interest. The humming servers on the screen, quietly processing vast amounts of data, symbolize the hidden, growing infrastructure. But it's not just that they changed their minds. It's asterisk why they hid it, and what their true agenda with this emerging powerful asset class really is. The thick legal document on this executive's desk represents a crucial turning point. Regulatory evolution, not public sentiment, began to provide a legitimate pathway. Key frameworks, guidelines, and official statements from bodies like the U.S. Securities and Exchange Commission, or SEC, started offering essential clarity. These headlines and excerpts highlight the seismic shift. SEC guidance on digital assets in 2021 and the European Union's Markets in Crypto Assets Regulation, or MiCA, passed in 2023. These dates mark the legitimization of digital assets, making institutional entries safer and, crucially, more profitable. This animated graphic reveals the underlying irresistible draw. Blockchain technology itself, its inherent advantages, decentralization, immutability, unparalleled efficiency became simply too powerful to ignore. For traditional finance, these properties promised faster settlements, increased transparency, and drastically reduced costs, especially in areas like complex cross-border payments. The disruptive technology was now undeniable. This glowing, interconnected digital network visualizes blockchain's immense potential. It was never just about Bitcoin, it was about the fundamental disruption this technology promised across all financial services. An aha moment for the industry, realizing they could harness its power, domesticate it, for their own strategic gain. Then came the irresistible market pressure. This montage of news reports highlights a surging, undeniable demand from clients. Pension funds, sophisticated wealth managers, and institutional clients began clamoring for direct access to digital assets. Major institutions, facing an increasingly competitive landscape, found themselves compelled to adapt or risk being left behind. The dimly lit screen on this empty trading floor captures the quiet, strategic capitulation. A convenient narrative emerged. Wall Street's institutions were simply responding to client demand, compelled by external market forces they could no longer ignore. A plausible, straightforward, yet incomplete explanation. But what if this simple explanation is exactly what Wall Street meticulously orchestrated for us to believe? This abstract, opaque network suggests a far more complex, perhaps cynical, motive. What if the very public condemnations were not genuine skepticism, but a deliberate strategic ploy? These internal documents and mock-ups reveal a dramatically different timeline. Project Mercury, a secretive internal blockchain initiative, dates back to 2018. Goldman Sachs' extensive digital asset initiative, launched in 2019. Long before mainstream regulatory clarity or overwhelming client demand, institutions were already building their digital infrastructure, quietly, aggressively in the background. The light flares spreading across this world map mark the quiet establishment of crypto teams and operations in various financial hubs. This widespread early development points not to reactive capitulation, but to proactive, strategic planning. A long game played out in the shadows was well underway. The lone figure in this grand boardroom overlooking the silent city encapsulates the stark paradox. If these institutions were truly forced into crypto, why were there such extensive secretive preparations, years in advance? This visual refutes the simpler narrative entirely, leaving a deeper unsettling question. What was the true hidden motive? This vast data center, humming with immense controlled power, is the physical embodiment of the true play, strategic control. Institutions needed this critical time to not just understand and build, but to strategically accumulate digital assets at dramatically lower valuations, all while publicly maintaining a skeptical, dismissive front. This infographic starkly illustrates the staggering scale of their current entry. Billions are now flowing into every segment of the crypto world. Exchanges, decentralized finance, or DeFi, non-fungible tokens, or NFTs, and foundational infrastructure. The arrows grow in size and quantity, showing the massive, undeniable investment. The long game is now visibly paying off. These recent news articles confirm the overwhelming widespread embrace. BlackRock, once crypto's fiercest critic, now files for a Bitcoin exchange-traded fund, or ETF, in 2023. Goldman Sachs aggressively expands its digital asset division. The public posture has completely reversed. The quiet accumulation has blossomed into overt, undeniable integration. This is the calculated payoff of their long-term strategy. Traditional financial symbols now seamlessly intertwine with digital asset logos on this dynamic screen. This monumental pivot isn't solely about generating new profits. It's profoundly about maintaining and extending financial control. It's about integrating and shaping the very future of finance, effectively domesticating its disruptive potential within existing powerful structures. The animated world map, subtly overlaid with the omnipresent logos of major financial institutions, visibly shows their dramatically expanded influence. Digital assets are not replacing old money. They are becoming a new, highly valuable frontier for it, absorbed and controlled within the established order. The future of finance, as these giants see it, is meticulously controlled. Yet, as this foggy financial district street disappears into the encompassing mist, significant, unresolved unknowns stubbornly remain. The precise financial value of these quiet investments, the full internal strategic roadmaps, the true extent of intense lobbying efforts, all are still largely hidden from public view. Complete transparency remains frustratingly elusive. This compelling infographic, titled "What This Means for You," translates these monumental institutional shifts into tangible personal impact. New investment opportunities are certainly emerging, but will this bring increased market stability or simply perpetuate continued volatility? The astute individual investor must now navigate this digital future with informed caution and critical awareness. The informed individual, seen here intently watching the complex crypto markets, keenly understands the immense stakes. It's about identifying genuine, sustainable opportunities before the broader masses, recognizing when hype is meticulously engineered by powerful players, and truly understanding the profound long-term implications for your own financial future. This constantly evolving blockchain network leaves us with a final, profound question. Will digital assets truly usher in a decentralized financial revolution, or will they merely become a new, highly controlled frontier for the old guard of global finance?